Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
One of the core themes of Saylor's discussion is Bitcoin's liquidity and volatility. He draws attention to Bitcoin's superior liquidity compared to traditional assets, like real estate. In the event of a crisis, such as a missile strike, Bitcoin can be sold instantly, whereas assets like New York apartments cannot be liquidated so easily. This liquidity, coupled with the ability to easily short Bitcoin, creates a dynamic and volatile market. Saylor is quick to point out that Bitcoin's volatility should be viewed in the context of its long-term performance. Over the past several years, Bitcoin has delivered 44% annual returns, vastly outperforming the S&P 500. He suggests that while traders can take advantage of short-term volatility, long-term investors stand to benefit from Bitcoin's upward trajectory. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy has bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is Nvidia, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy. We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral. Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand, but you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain this?
That's okay.
Can you explain this? One of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Corey Clipston also touches on the broader trend of Bitcoin adoption among private companies. He mentions that over 1,000 private companies actively buy Bitcoin through services like Swan Bitcoin. Many of these firms have made significant allocations of their treasuries to Bitcoin, mimicking MicroStrategy's approach. Saylor credits his unique position at MicroStrategy, where he had control over key decision-making processes, for enabling the company to move swiftly and decisively into Bitcoin. However, he notes that private companies are increasingly following suit, adopting Bitcoin as a core part of their financial strategy.
I will say just a quick note. I mean, private companies do this constantly. We have more than 1,000 private company clients at Swan that buy Bitcoin regularly through us. So I think that's, I think it has something to do with having control. And that was a unique feature of Michael Saylor's position with MicroStrategy. And maybe that's the reason that he was able to do it and others have not, because he had control over the board and kind of controlling shares and could almost unilaterally make these decisions and drag other people along. And that's probably not a feature of a lot of the other pubcos. But private companies act just like him. They do it. They stack Bitcoin and have large percentages of their treasuries in Bitcoin already in many cases. As far as other, I think anytime you see the financialization of an asset class, it kind of starts with that 1x long, and then you start to see recombinations, and then you start to see it kind of work through the money management layer. So, I think an ETF has to be live for 6 months before Morgan Stanley will push it through their broker network. I don't know where Ameriprise is with their hundreds of thousands of reps all over the country. And then there are large money managers, the independent RIAs that manage trillions of dollars. I think it's over $30 trillion asset pile with the independents. And that's very hit and miss. I think the last time I looked, something like 2 out of the top 30 had kind of stated something publicly about Bitcoin. This probably goes back to last fall, so maybe it's changed a bit with the launch of the ETFs, but it wasn't much. And you and I have chatted a little bit just socially and talked about it. Like, we're in a position where, when I go mix with people, put up a booth at a street fair, which I'll do every once in a while just to kind of see what normal people are. I think fewer than half the people in the United States know that you can buy less than one Bitcoin. I think they think you need at least $55,000 to be able to participate in this. And I think that's more than half the population. So it's just super early for people to even understand it. And the ETFs are breaking that down a little bit because people see the price of an ETF share. But that other 50% that doesn't know you can buy a fraction of a Bitcoin aren't really mapping to ETF buyers usually either. They're not watching financial news and kind of understanding this thing. So it's just super early. And, I run into people that run huge books of business on the wealth management side that still have absolutely no idea about Bitcoin. They've just stuck their head in the sand and just not spent any time on it whatsoever. And these people often manage, tens of billions of dollars.
So when we say that the institutional floodgates, are yet to open, would you say they're about 5% open, 10% open?
They're open. I think it was a big deal. That was it's open and it's starting to rush in. And I think that we'll know a lot more. The ETFs have never existed in a bull market. Let's see what happens. If Bitcoin starts to see the kind of price rise that it's seen historically, went up 110x from trough to peak in 13, and 22x from trough to peak in 21, right? It went up from like 3,100 to 69K. So let's see what happens if Bitcoin sees, even a 3x or a 5x or a 10x or whatever it is over some sort of shorter period of time. I'm really interested to see if there is kind of like a multiplier effect with the ETFs. And then obviously with the countervailing force of the derivatives and the Wall Street traders and, the 0.72s and the Citadels, trying to wreck people that are going leveraged long. It'll be interesting to see them all fight it out. But I think more participants, the better. And again, just like with a lot of the FBI agents that have targeted Bitcoin criminals, 10 years ago, they become huge Bitcoiners, and they get into it because they're forced to learn about it. I think it's probably similar on Wall Street. Like, let's say you're one of these hedge funds and they say, hey, this looks like an easy market to just wreck some of these retail guys that are, stupidly going leverage long in offshore exchanges. Let's play some games at midnight and wreck these people. Well, they're more likely to listen to a Bitcoin podcast or to watch you and me talking about Bitcoin next week when that hits their feed on YouTube. And little by little, Bitcoin just sort of bends them to its will and brings them in too. I don't put much stock in what politicians say in an election year as they're seeking donations and such. And there's not much of a commitment if you're talking about just taking the confiscated coins from other people and saying we're not going to sell those. I guess, if there is legislation in the next 4 years under a Trump administration that actually calls it something like strategic Bitcoin reserve, I would lose an even money bet. I don't expect that.
You don't expect that?
I don't expect that to actually happen. Even under a Trump administration. I could see them maybe like not selling the coins, which I think that a Harris administration would probably try to sell those coins and doesn't want the Bitcoin on the government balance sheet. But we'll see. I think in the broader view, I think it's inevitable that many nations hold Bitcoin on their balance sheet. I think it's pretty clear that there are some countries around the world beyond just the publicly obvious ones like El Salvador. I think there's enough industry rumor of accumulation by sovereign wealth funds, at least, and potentially even state entities in the Middle East, possibly China, almost certainly Russia, have been either buying or mining Bitcoin and stockpiling to some degree. So I think that's probably evidenced in if you look at the Bitcoin mining network hash rate, and a quarter of it is the large public Bitcoin miners. The other 3/4, there are bound to be some large actors in that have a lot of hash rate, regardless of how well they're masking it.
Corey Clipston speculates that Bitcoin will eventually find its place on the balance sheets of governments and large sovereign wealth funds. He believes that countries beyond El Salvador are already accumulating Bitcoin, albeit discreetly. This quiet accumulation, particularly by state actors in the Middle East, China, and Russia, is evidenced by the global distribution of Bitcoin mining hash power. Clipston argues that the financial world is on the cusp of a major shift, with Bitcoin playing an increasingly central role. He predicts that once Bitcoin enters another major bull market, driven by a combination of institutional adoption and the growth of financial products like ETF, the world will witness a surge in Bitcoin's value and prominence. Please like and subscribe my channel.